Wednesday, November 5th, 5:01 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Happy Hump Day. If you don't know what that means, it means the middle of the week. I'm going to go over the broad markets using the futures. If you are not familiar with the futures, they are one of many financial exchanges. Give you an example, there's the stock exchange, which is different than the futures exchange. The options exchange, which is different than the stock exchange. The crypto exchange, different than the stock exchange. The fixed income, different than the stock exchange. And each financial asset is available on different exchanges. So going over the futures exchange, I'll give you two of them. One of them is the CME Group, Chicago Mercantile Group, Mercantile course in Chicago. The other is ICE in Atlanta. They list assets that trade in the futures market. Just like stocks, some stocks have options, or in the futures market, all the futures offer options. In the futures market, one of the big difference than the stock market is that they are derivatives. Options, futures, assurance are derivatives. They have expiration dates. You have some that are for 1 year, some that are for several years, some that are for 1 month. And they all require margin, all the derivatives require margin. The exchanges have a policy, what the minimum is, margin, and the brokers could add on to that. In times of extreme volatility or expected volatility, those margin requirements change. Before we start looking at the futures, one more thing. The futures market offers many categories. Just like the stock market has sectors. Within each stock sector are industries. Well, in the futures market, you have equity indexes, you have commodities, you have crypto, you have yields, you have currencies. My day trades are with futures. My swing trades are mostly with options. So since we already started the new month, I'm going to include 3 grids here. The far right is the monthly, the middle is the weekly, and the left is the daily. Again, the markets just closed 4 minutes ago. The futures will reopen 6 p.m. New York time. That's another wonderful thing about the futures. They have longer trading hours. They trade available before U.S. stock markets open as well as after the stock markets open, just for the future assets. So since we started the new month, looking here at the S&P 500 futures, it's a yellow candle. That just simply tells me we're inside the range of the prior month. We haven't taken out yet. Also, when it's a solid body, that's equivalent to a red candle. Or if it's a hollow candle, it's equivalent to a green candle. So the trend hasn't reversed. We're still inside the range. On the monthly, it has not. In the middle, the weekly, we certainly have changed. We broke the low of last week, currently lower high, lower low. We also filled that gap. It was a minor gap, but we filled it. We also tested midpoint of that top wick and filled to even cross it. We have buyers stepping down here on the dip. See that big wick? Buyers are stepping in here. This candle won't be done till the close of Friday, 5 p.m. On the far left grid, the daily. Look at the past few days. So today we closed green. Lower high, lower low, big wick on the top, big wick on the bottom. The trend is down. Lower highs, lower lows, past few days. Huge impulse move down yesterday. Here's a key level of swing point. Let's go on to the next financial asset, 10-year yield, which is part of the U.S. Treasury. Fixed income products. So on the monthly, yep, inside candle, hollow, equivalent to a green, meaning more bullish bias. Look at the middle grid, the weekly, huge body, bullish candle, higher high, higher low, broke above the high of last week, broke above this trend line, up strong. Higher yields, equivalent to higher interest rates. Higher yields means the U.S. Treasury Department will have higher yields for those fixed income products, means the U.S. debt will be paying higher interest. Here's the swing point. Key level. If we break that and close above that, one is to expect us to go up even further. Daily chart. Look at this huge trading range today. Broke above this supply zone. That red area was the supply zone. In the past, there are huge sellers there. Look, you had this huge red candle move down. After that, green candle making a supply zone of sellers. Well, since last week, we had this huge impulse move up, close above here. Past few days, consolidation, another huge move up. Broke this trend line. And look at this swing point up here. Let's go take a look at the US dollar index. US dollar index. Look at the far right monthly, higher high, higher low. Already broke above that swing point. See if we're going to go into this midpoint here. Me, I've been day trading currencies today, yesterday. I've been trading bearish the euro and making profits, trading inverse of the US dollar. The weekly chart. Yep, look at that high, high, low. Testing right here, swing point. Key level. We're going to see if we're going to have continued momentum going up or if we're going to build some kind of consolidation reversal. And the daily chart. Dodgy candle. Again, broke that swing point, swing high, rejected it. Dodgy candle. Means one of two things. Means potential reversal or halfway point. Halfway point would be is that this trend from here to here we're likely going to continue after this dodgy. That could be a lot higher. Could be somewhere up in here. Or, again, it means potential reversal. A little tiny body, big wick top bottom. Use caution. It's key level to be watching how it's going to play out here. Let's go look at the largest currency inside the US dollar index, the euro. Broke the low of last month. Weekly, broke the low of last week. Inside this prior demand zone. Demand zones, buyers, green areas. You can see a little wick on the bottom, buyers stepping in there. And the daily chart. Inside, tested a prior demand zone of buyers, closed green, big wick on the bottom, buyers stepped in there. And we also closed back above the close of the red candle. Again, that red candle at the bottom, the bodies were closed. So potential reversal here, even though it's not a dodgy. Big wick on the bottom, again, body closed above the close of the prior day, potential reversal. Let's go look at commodities. First is energy, and there's several assets in energy. One of them is crude oil. For the month, inside candle. Look at that. Weekly, we already broke the low of last week, which was that inside candle. And we're testing the midpoint of this big green candle, which may become a demand zone. Currently trading below $60. And look at here on the daily on the far left. White trend line. Touching it, rejecting it, touching it, rejecting it. broke the low of today, but also broke the low of yesterday, also made a higher high today. Again, rejecting this trend line. It's in a sweet spot. Testing this imbalance area. I'm still bullish, and I'm putting on bull put spreads. That's with options on the stock ETF USO when we're below 60. Let's go look at the next energy asset, which is natural gas. I have bullish positions on still, and they are doing outstanding. They've been put on for a while. Natural gas monthly. Look at that, already broke the high of last month. Some rejection on the top. Weekly chart also broke the high of last week, broke the high, the swing point here, key level. Some wicks on the top, potential pullback in this key level. I'll be looking to reload on pullbacks on weakness. Another key level up here. Amazing, right? You have natural gas taking off like a rocket ship, trending up, and crude oil trending down. Wars can do that. Not just wars, there's other economic, geopolitical reasons. So today is hump day. We close inside candle. Solid body equivalent to a red. Wow. Potential reversal, potential pullback. Some key levels already looking at. We haven't even tested the gap yet. Wow. Let's go look at commodities, another category. Metals. Gold. Inside candle for the month. Look at that, a little dodgy. Weekly. Yep, the trend is down. Lower highs, lower lows. Current week. Inside candle. No reversal yet. The momentum is still down. Daily chart. Huge consolidation. Building a lot of energy for the breakout one way or the other. Yep. Demand zone here. Key level. Potential. For me, I'm looking for reloading if it comes in here and does some key level, key candles, hasn't hit. And here, supply zone of sellers. Be interesting how it's going to play out the next few days. Let's go to the next metal, silver. Monthly silver, inside candle as well. Weekly inside candle. Big wicks on the bottom, buyers stepping in on the dip. And the daily chart almost formed a bullish engulfing candle there. Very interesting. Yep, potential reversal here. Nice. Let's take it to the final asset. Crypto. The crypto of Bitcoin. Monthly. Wow, already broke the low of last month. Lower high, lower low. Here's a key level. We'll see if it plays off that or if it's going to break below that. Time to tell. Weekly chart, again, broke the low of last week, broke the low of this consolidation. Big wick on the bottom, some buyers stepping in here. Just shy of testing the swing point. Again, consolidation, staircase pattern, lower low. The trend is still down. The daily chart. Yep, here's the high of the year, way below that. And this consolidation, breakdown, consolidation, huge impulse move down yesterday. Yesterday broke below this white trend line. Yesterday broke and closed below that swing point. Inside candle for the day. Just shy of the swing point. Yeah. This asset is what? This asset is showing distribution, smart money selling. I have no reason to want to be buying here on the dip. It hasn't proven itself. Again, the monthly, lower low, lower high. It broke below the monthly already. And it's only 5 days in the new month. Yeah. Weekly, again, I have no reason to want to be buying this on a dip yet. If I do, I'm more interested on the metals. Thank you as always, spending just a little time with me. That's it for the video. Thank you for watching.